Trust is about consistency more than complexity.
This is around the time Harshad Mehta is active in stock market.
Yes, the stock scam happened.
How do you see this mutual fund industry evolving over the next 5-10 years? How are the Gen Z investors? How do you think the role of a mutual fund distributor will play out? What's your personal definition of wealth?
Being too active on your portfolio, आप जहाँ पे हैं वो एक बहुत ही promising area है. सब लोग की जीत तभी होती है जब investor की जीत होती है.
Hello, our guest today is a veteran of Indian financial services industry. He's worked with private banking setups and now runs a very large mutual fund business. From leading global wealth management teams to steering Bandhan Mutual Fund, he's helped shape how India invests. What truly sets him apart is his ability to blend a global perspective with local insights, redefining what trust and innovation mean in the mutual funds business. Please welcome Mr. Vishal Kapoor, CEO, Bandhan Mutual Fund, one of the most respected and forward-thinking voices in Indian investing. Welcome, Vishal.
My pleasure, Manish, and thank you so much for having me here.
Right. Why don't we start with a rapid-fire round today? So here goes. One thing you do better than other AMC CEOs.
I think we try very hard to make investments accessible by simplifying our language. It's still a journey, but I think as a team, we really want to make investing accessible. So we try hard at doing that.
Right. A stock market lesson you're still learning?
I think letting your money work harder than your emotions do because they complicate things. So let your money be. Don't get your emotions involved.
Right. A mistake you're glad you made early on.
Trying to time the market. I think I made that mistake very early and stopped.
The most overrated investing gyan that you hear nowadays.
Making money out of headlines. I think, sometimes we overreact, try and do too much. Sometimes just doing nothing and let headlines play out is perfectly fine.
One financial product you will never recommend, irrespective of the hype around it.
Something that's offering abnormally high returns without any risk.
One lesson that you've learned from either a client or a distributor that no finance textbook has ever taught you.
I think trust is about consistency more than complexity.
That's something that the clients and distributors have taught you. Fantastic. Thanks, Vishal. You worked across private banking, consumer banking, and now you run a mutual fund business. What's the one leadership lesson that stayed constant and you've applied in all three roles?
I think firstly, I've been fortunate because I've worked with some wonderful teams, whether it's asset management currently or previous stints in consumer banking, private banking, wealth management products, etc. Working with a great team, great supervisors, great bosses, great leaders gives you a lot of rich experience. But one thing I noted, which I've tried to apply and still trying to apply, is ownership about the role or the job that is given to you. And when I say ownership, it's not just doing the task. It's really taking accountability for the outcome. And I've seen that the leaders or in my personal situation, when you apply that approach, it turns out to give you better outcomes. And then that allows you to be more successful, whether it's as an individual or as a team.
So accountability for outcomes, that's an interesting take. I'll just like to dwell on that. So there are roles like sales roles where the outcomes can be clearly defined, but there are roles in organizations where the outcomes or results cannot be easily defined, like say a service role. How have you sort of tried to build this accountability in, let's say, non-sales roles across these organizations?
Right. And you're right that, in certain areas, measurement metrics can be a lot more diffused than in sharper areas. But I'd go with the intent, the hat you're wearing when you put yourself to the task. And that's what I mean by saying that, if I approach it as an owner, irrespective of how the world will judge whether the outcome was good or not, do I truly feel I gave it my best? And do I truly feel that this is the best I could have done under these circumstances? I think let that be the barometer. And I feel that, whether it's me or team members who apply themselves with that intent, end up giving it the best shot to their potential, and everyone's potential is different. And that is often a good enough outcome. Sometimes the metrics can be wrong. Not every metric is perfect. So I would go more by, are you doing your best possible? And that, I think, can be helped by a ownership mindset. And that's one of the values that we espouse in our organization as well, just incidentally.
Right. So intent and commitment is how you would define ownership. We are pretty close to Bhagavad Gita, right? Aap apna karm kariye, right? Because the results are anyways, they have just too many variables to sort of really judge anybody on results. Would you say that? That as long as the intent is right and there is wholehearted commitment, you are happy with.
Right. Except I won't apply it to bonus time. So, so right through the year, absolutely. But at bonus time, I think all of us as employees will want कि नहीं results की भी चिंता करनी पड़ती है.
Bottom line, right? Thank you for that. Looking back, what's the one decision that's defined your career in asset management business?
I think I don't know if I can trace it to that one decision, but I got an opportunity very early on to try and manage money. And this was, in my college days, and this was trying to help my parents with a bit of investing. As a typical middle class household family, most of our money, my dad's money, used to be in fixed deposit. And said, look, stock markets mein kafi action hai. Why don't we do a bit of this? And he said, okay, you try out. I don't know enough about it. But that was a baby step into the world of investing. And I think that probably drew me into this area. And, then as things work, if I look back, one, did further education in that area, joined the industry, and then has carried on, probably based on the fact that, you have to try something out to really know whether you are interested in it or not interested in it. For me, that was the first step that drew me into the industry. And after that, I think the industry has been a wonderful place, where you've been able to, do so much, grow so much, and being able to help so many people.
So let me see the timeline. This is early 1990s. You are at Xavier's Calcutta and you're investing in stock market.
Yes.
And this is around the time Harshad Mehta is active in stock markets.
Yes, absolutely.
So tell us something about those days. What was it like long before online trading, before NSE came in?
Yeah.
Wonderful to hear some of your thoughts and experiences.
Yeah. No, very different world. If you can imagine the Sensex hovering around the 1,000 mark.
Sensex at 1,000.
And then you think that, when you look back, you say, oh, why did I ever sell that stock? Had I held on to that, this is when the time when Infosys ka IPO aa raha hai, or HDFC or ICICI ka IPO aa raha hai, and things like that. That's what is happening. And an IPO meant that you fill up a paper form and you apply, and it's like a lottery because the price is controlled, governed by the CCI, the controller of capital issuers in India, etc. So it is literally like a lottery if it's a good stock, because day one you will get 2x, 3x, 5x, 10x returns. So very rich, very unstructured relatively, very volatile as well, even in relative terms. And then, of course, the stock scam happened. So, from 1,000 to 4,200 odd, fell down to 2,000 something odd, stayed that way for a decade. So, a sideways market almost after that for about 6-7 years, if not longer.
Great learning, you would say.
Great learning and lots of mistakes as well, but therefore great learning.
Right. Thank you for sharing that. By the way, congratulations on your appointment as the Vice Chairman of AMFI.
Thank you.
How does it feel to take an influential role when the industry, some say, is at the cusp of the next level of growth, when financialization of Indian savings is really kicking in?
Right. Firstly, I think the role is really a privilege, it's an honor, and it's a responsibility. And, I've been blessed to be involved with AMFI for the last several years. This was just an additional, ability to contribute at a wider level than what I've been trying to do over the last 5-6 years in the distribution world as an ARN committee chair as part of the board. So this is addition to that. It does give you a bit more width in terms of where one can get involved and help and contribute. Also liaise, because a lot of this is about just putting views of different stakeholders across to policymakers and vice versa. So a bit of this is about that. It is certainly exciting, but also humbling, because, like you rightly mentioned, I think while we've come off a long way over the last 20-25 years, there's just so much more potential. And I think when we look back, mutual funds are really now seen as a primary mode of getting savers to become investors in India. But there's also so much responsibility, therefore, to make sure that nothing goes wrong in the story. And being a financial products which is talking to so many small investors, I think that ownership in taking accountability, responsibility as an industry is one of the most important things I think we should be focused on to make sure that this trust that has been bestowed on us is never broken.
So, leadership comes with its own set of challenges. How do you manage expectations of various stakeholders, whether they are your employees, shareholders in your company, and investors at large? What are some of the things that you keep in mind every time you look at your role?
Uh, I think my approach generally has been to be very transparent and over communicate if you have to, in a sense, because I do think that stakeholders understand. We should not make the mistake of thinking that they don't get it, in a sense. But only if you're going to share the issues, the challenges, the points of view, or where the conflict is, will one be able to find out a good enough solution or the most optimal solution, in a sense. So I've generally approached many of these areas with a sense of openness and transparency. Put the problem in front, in the middle of the table, and say, look, how do we solve this? And at least for me, I think that seems to work.
So, when in doubt, communicate.
Communicate, be transparent, put the problem, as a common challenge for us to all solve.
How do you see this industry evolving, the mutual fund industry evolving over the next 5, 10 years?
I am a very big bull on this because I think when we look back at the journey of our industry and look at some of the lead indicators that we see today, it just gives you a very, very good sense about how broad and how deep the inclusion agenda has actually reached, and there's still so much more to do. So it's good where it is, but there's so much more to do. So in the next 5 years, I would say the continuity in inclusion should accelerate, not just be where it is, with so many more, so-called B30, but really more number of investors across towns and cities that we are not able to reach, getting included. I think the role of technology, the role of easy communication, digital communication has a very large role in that. Reducing friction, reducing cost, that again is enabled by technology, by policy, by regulations, etc. So these two enablers are allowing us to go out into and reaching customers that was otherwise very difficult to do. And therefore, the growth becomes a lot more broad-based. Even if you look at recent trends as an example, right? While the headline sales and net sales may fluctuate a bit, right, based on where the markets are, whether you're bullish, bearish, are you booking profit, are you investing more, whatever else the investors are doing, the SIP numbers is a great indication of what at the margin investors are doing. And that's what it really encourages us to see that the number of new customers is increasing, the number of SIPs is increasing, the number of distribution partners is increasing in the ecosystem. So that gives us a very broad, diversified growth path ahead. And therefore, I think this is something that can sustain for at least 5, but why not 50 years?
Right. Which brings me to a question that we often think. People like you and me who've been around, who've seen the dot-com bubble, who've seen the 2008 GFC crash, who've seen markets going sideways. In your case, in the 90s, my experience was between 2008 to 2013. Since 2020, we haven't seen the kind of drawdowns that we've seen earlier in Indian stock market. There could be multiple reasons, but the fact is we haven't seen that kind of a drawdown. So a lot of these investors who've come to the industry post 2020 haven't really seen the kind of drawdowns that equity markets across the world historically have seen. Let's say something like that comes up. I don't know when. We don't know when. There's no point trying to time the market. What is it that as an industry we are doing to prepare people in terms of training, educating them that stock markets are not a one-way street?
Right. No, it's a very valid point, and I think it's something that we must be cognizant of. That every time you think that all is good, there is a sharp turn somewhere that you did not see coming, and then that led to things not being so very good. But see, two, three things may have happened, which is that the structure of the market now is probably a bit more broad based than if I look back at the cycles in, let's say, the 90s leading up to the dot com bubble bust, the GFC, and then the taper tantrum, etc. And of course, the COVID related sort of event type corrections. Because there are more participants. So, just as an example, we did see an elongated period where FIIs were pulling back heavily.
Right.
Now, in the previous decades, that would have led to a very sharp correction.
Right.
But now, because you have multiple stakeholders who are now larger in the scheme of things in the market, DIIs, mutual funds, insurance, even family offices, direct investors, retail investors, it balances out a bit more. So it buffers a bit of this sharp moves that you would see. So multiple players in the market does lead to more diversification and therefore more shock absorbing capacity
Right,
in
right.
the industry. Now, of course, one can never rule out a shock. But sometimes you feel that if you're waiting for the shock as an entry point and a deep and sharp correction, I think over the last 5 years now we've seen that that deep correction, just before it starts getting deeper and deeper, there is enough buying that comes in. Because of a diversity in views that may exist. So if one group of investors think it is time to get out, someone else think it's cheap enough for me to come in. So I would say that, look, you can't really manage volatility. What you can do is look at your own objective, and therefore, coming back to your point of you can't really time the market. So if you are waiting on the wings, I would say, do you really think you can get the bottom?
Right.
And if you're getting too excited about past returns, you should be aware that markets are cyclical and abnormal returns cannot sustain. So it will
Right.
normalize at some point in time. Don't be disappointed by that.
Right. And I think the education aspect of this, the fact that we do a lot of IAPs and the fact that you as an AMC run this wonderful movie called One Idiot, I think we are at our in our own ways and at our own levels trying to communicate that this is not going to be a single straight line story. There will be volatility, but as long as you know what you are getting into, we should all be good.
Right,
Right.
absolutely.
You've seen Indian investors evolve over the years. How are the Gen Z investors different from the kind of investors you would meet 15, 20 years ago?
No, I'm very impressed, to be honest, because I think the current investors, the incoming investors now, one, they're very curious. So they are learning very rapidly. And thanks to, I think, all the information available, easily available, accessible now, the learning curve is much steeper, much faster. So the depth of knowledge is actually very impressive. They are also willing to take more risks than I would have been in their phase in life. So with awareness, with curiosity, with an understanding of risk, if someone is able to take more risk, I think it's a great combination. In a sense, they are very demanding as well, rightly so. Right, so it's not just about how much. They're also asking the question of why, and therefore why will it sustain. So it's not just an end outcome focus. They do want to get into and understand the process and why will this sustain. So it's far deeper than I would have been 20, 25, 30 years back. So I'm actually very impressed. I think expectation management is always going to be, in any generation, a question mark and a challenge, because while that may not be the average, there will always be extremes of someone who thinks that just because I made 60% returns last year, I'll keep repeating that every year. But that's the natural course of learning curves that will happen. So glory to you if you can. But if you can't, then you shouldn't shun the vehicle or shun the investment process just because you were not able to deliver the same returns in your portfolio that you did over the last 4-5 years.
Right. Manage expectations as to what kind of returns you will get going forward. Right. So not only is the demographic changing of the investors, it's the cities they come from. A lot of customers, like you mentioned, are now coming from beyond top 30 cities in India. How's that influencing product design and distribution strategies for mutual funds and especially for Bandhan AMC?
It's a very interesting point that, clearly as AMCs, we have to adapt and offer the right package, the right communication, the right products for the evolving set of investors that we're serving. I think when you look at the new set of investors coming in, like we mentioned, they're curious, they take a bit of risk, they are very digitally savvy as well. So reaching out to them is becoming easier, simpler. We have to adapt the way we communicate, as an example, right? So in the old days, you would have newsletters and you would have fact sheets, etc. Now we are doing that through reels and videos because it's much easier to consume, to communicate. So it's one of that. I mentioned earlier that simplification of our language, I think, as an industry, is a need because we have our own jargon which really no one cares about or should care about. So we just have to be able to communicate better. When it comes to products, I think there is a mix. At one end of the scale, there are a lot of, whether it's distribution community or higher end, more sophisticated investors who are saying, look, as a manufacturer, give me sharper products and I will do the mixing. Right. So that's where thematics and, very complicated strategies, some evolved index products like smart beta funds, etc. come in. So they're saying, look, give me more of that and let me choose how I want to construct my portfolio through funds, right? So that's one end. At the other end, there is still a very large proportion of the population which is saying, look, this is too complicated. Just give me a simple goal-based solution that I can just put my money into and forget about it.
Right.
And that's where I think hybrid products, goal-based products, etc., are also doing very well and can grow. And see, that's the beauty of India. You don't have to be choosing one or the other in one sense because there is large enough demand for both ends of the spectrum. So simple products which are just serving a very basic goal, whether it's just saving your money in an efficient way or giving it a bit of a growth thrust with a hybrid fund, starting small. That's also a large market. At the other end of the spectrum, sophisticated distributors, partners, investors wanting, like, give me sharp products. I will mix and do my allocation. I will take the call. Your job as a manufacturer is just to manage it efficiently. And so both ends, I think, coexist.
India is nothing if not scale.
Absolutely.
Right. Since we are talking of fund management strategies, two questions. What role you think AI will play going forward? And how long you think as an industry we'll be able to generate alpha? Or are we structurally moving to passives?
Right.
So the AI question first.
Right. So look, AI in fund management has very interesting use cases. But if I were to try and group them, and this is a very broad basic grouping, one is around efficiency of processing information.
Right.
Which is that, if a researcher is doing something in so many hours, can AI help you do it in shorter time? That I think definitely is a very attractive use case because with the amount of information, structured information data available, your ability to process it faster, more efficiently should lead to efficiency gains in fund management and research. So that's certainly something that we would think will help us become efficient. The other use case that I think has been getting worked on for some time now, including at Bandhan Mutual, is to see if a algo or a model or a deep learning process can actually beat an active fund manager. So way back in 2017, we actually started a PMS, which was end-to-end AI-based PMS. So the model will look at the top 200 companies, select a portfolio of 30-odd companies based on a certain risk-reward optimization. And we said, let's see how that portfolio does. And there is a lot of learning from there. And generally, you would find that models are very efficient when things are very steady and there is predictability of information or trends.
Right.
But when the structure of the market changes, when edge cases happen, the modern model naturally is not able to see beyond. So it can't see through the corners in a sense, right? And that's where the active fund manager still has a lot of market insight, adaptability, agility, which can work. So to my mind, is it proven as yet that the active manager is not going to be adding value? Not really, I would say, because it's a function of so many things. The structure of the market, how quickly it is adapting, evolving, changing. Quality of data, models need a lot of data. Do we have the data in India? And, if you don't have the right data, how do you build more accurate models? So some of these factors will continue to develop, evolve. At this stage, do we see that there is a proven case where one can say that, look, there is no future for active fund management because passives have taken over or models have taken over? I think we are too early in our market development to be able to make that prediction.
Interesting you mentioned that PMS, because I think you've then replicated that strategy now in your multi-factor investing fund.
That's right.
Right. So that strategy is now available on a mutual fund platform. So you've run it for about 7 years and now it's available for everybody on a mutual fund platform.
That's right.
Right, moving on. Now we move on to a section called Inside My Portfolio. Vishal, what's your personal definition of wealth? A number, a feeling? Is it freedom from all worries? What's your definition of wealth?
Right. Okay. I think for me, one, it's not having me or my family needing to worry about money. I think wealth does give you, or give me a bit more flexibility with your time. But on the other hand, while I think it should give you a sense of contentment, allow you to sleep well at night, I think it's also important to have a goal of some larger purpose, which should not stop you from dreaming. So while I think some amount of wealth is important so that you sleep well at night, I think a stretch goal to say that you should not stop dreaming, to aim at larger things, whether it's wealth or not is a different thing, is also very important.
So after a point, wealth is a safety net and then you do whatever you want to do, is it?
Yeah, it should allow you to do what you really want to do, including if there is a passion or there's a purpose or there's a cause that really is close to your heart, then is there a way to contribute to that in a larger, meaningful way?
Right. One mistake in your portfolio that you've made and you still regret?
We talked about earlier, investing in the 90s. And I think, some of the gems I had then, getting out too early is clearly a mistake. So, sometimes you reflect and say, being too active on your portfolio is not necessarily a good decision.
Like they say, youth is wasted on the young, wisdom is wasted on the old.
Well said.
You manage money for others. How do you handle your own money? What does your portfolio asset allocation look like?
Firstly, as a principle, most of my money is with my own fund. Two is I don't do a lot of active management of that money. So most of it is through SIPs, because in a salaried job, I think we have the benefit of knowing exactly how our cash flows are, and if your expenses are largely stable. It's relatively simple, I would say, to set that aside. So most of my money management is through SIPs. It's
equity mutual funds, SIPs and equity mutual funds. So your portfolio skewed towards equity?
I have an allocation in mind, which I relook at every year. And by and large, I correct it if it's tilted one way or the other.
And does it include gold?
It does. So my general sense is that, for different pots of money, for my retirement money, I have a certain allocation in mind. Put an SIP that gets you broadly in line with that allocation. It includes fixed income, it includes gold. But that could be done through certain funds also. So you don't have to buy it separately.
Right.
And then take a look at that allocation every year and see if you're out of sync or not. And then made some adjustment. That's about it. I don't think you have to do a lot more necessarily, unless you're a professional who's managing money for someone else. Then you have to be. So let the fund manager do the job rather than me having to also complicate life by doing something more.
Right. If you were to get 1 crore rupees today, would you invest it in a Bandhan PMS or a Bandhan mutual fund scheme?
Right. So if I were to get it, it's unplanned, let's say, cash flow. I would take a bit more risk. And therefore, I think a Bandhan PMS is a great idea there, because a PMS allows you to take a lot more risk. Actually, we run an AIF, not a PMS, but an AIF, which can allow you to take a bit more risk. It's a chunkier money. It is the minimum threshold required to make that investment, etc. So it's topping up on my risk appetite right now, because I think it's a good time to take a bit more risk. But I wouldn't advocate that for everyone, because everyone is different in their journey, right? If there's the only 1 crore I have, definitely I won't put it into one product or one strategy, which is a higher risk, relatively higher risk strategy. Although it's still in listed equity. It's not into private equity or any other complicated space. But then you would spread it out based on your allocation. So I think the response will be very, very specific to your specific need. An AIF is a great product if you want to add on a bit more risk and entrust a more bespoke strategy through a fund manager versus a mutual fund which allows you to do a lot more for that money.
Moving beyond mutual funds and your portfolio, what's your stress buster after a difficult board meeting?
No, firstly, I think our board members are very, very, committed and a wonderful set of individuals. So they don't give us as much stress as we imagine it outside. Like I said, it's a very participative, meeting because they understand us, we understand them, and therefore it's not a stress point in a sense. But in general, I think, stresses through work life and there are challenges that one has to deal with, etc. I think, like I mentioned earlier, communicating with the team and people who can really take a better stab at solving the challenge. I think that to me is a great way out.
No sport or some kind of movies or music that help you switch off? Nothing like that? It's all work?
No, I do switch off. I think that's very important. So I do have my space in the mornings and evening where I say, okay, this is my no work time, and it allows you to do other things. That does involve normally a morning routine will involve some form of exercise, some form of meditation, etc.
Right.
Some amount of music, listening to other things, not investment related, because there's just so much happening around the world. So that's definitely part of the routine. But that's because you just want to have a more balanced outlook.
Right. So if you weren't a CEO of a mutual fund, what would you be?
I would love to actually, be a food critic because you get to sample great food.
Travel the world and taste food.
Yeah, or a hotel critic. It's like not an easy job,
Not
by
an
the
easy
way.
job.
But finding out what's good, what's not so good, and making recommendations based on an experience of something which is very, very nice. Otherwise, it would be a nice profession, I think.
Staying at Uday Vilas for work. Not bad.
And criticizing them for something that you saw, or praising them for something that it was outstanding.
Right. Final question. If you had the superpower to fix one thing instantly in financial markets, what would that be?
That's a difficult one, I think, because it's not just one thing that one has to fix. I would say that expectations out of past behavior is something that I see repeatedly. All of us end up making the same mistake. So past high returns build expectations, or past poor returns get us completely off that product and we lose balance. And we started by saying that emotions overtake some of the rationality that should otherwise exist. So somehow being able to find that balance, I think, would lead all investors to a far better outcome.
Cure people and investors of recency bias? Is that how would summarize your answer? Is that a right summary of your answer?
And stop chasing recent returns. Yes.
Right. From global boardrooms to empowering small-time investors, Vishal reminded us that true success depends on building trust and bringing in innovation and communicating what's on your mind and what is it that you're doing. Thank you for joining us. See you on the next episode of ZFunds, the Sahi Aasan Podcast.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.